Hi, this is Peter Schiff. I am recording this on Monday, August 28th. And after flirting with the $1,300 level all year, today gold was finally able to break through that psychological barrier. We closed up about $19 an ounce at $1,310. But it's not just psychology that's been preventing gold from rising. There has been some tremendous supply that has been overhanging the market and that has turned the price of gold back every time it approached 1,300. And sometimes the selling was able to drive it down much lower, but the buying has been building steadily all year, and that point between resistance and support has been compressing as the market has been working off that supply. And today, finally, the demand was sufficient to overwhelm the supply and clear out all the sellers at 1,300, and the price was able to move above that level. I believe that this was a key resistance level, and as a result, I think the way has been cleared for the price of gold to move much higher, much quicker. In fact, if you look at the action that we've had in the gold stock market, I think gold stock investors have been very reluctant to bid up the price of gold stocks because everybody believed that the price of gold was not going to be able to break through 1,300. So even though the price of gold kept knocking at that door, traders expected that it would be once again turned away. So I do believe that now we could have a lot of money moving back off the sidelines into both the price of gold and silver, of course, and into the gold stocks. And I think one of the factors driving the price of gold higher is going to be the continued weakness in the U.S. dollar. The U.S. dollar again hit a new low for the year today. In fact, the U.S. dollar is on track to clock in the weakest year since 1985. Now, interestingly enough, when the year began, the consensus trade was long the dollar. Everybody was bullish on the dollar against just about every currency in the world. It seemed like the dollar had no place else to go but up. Trump was president. We were going to have all this stimulus. The Fed was going to be raising rates. Everybody wanted to jump aboard the dollar train, and it turned out to be the worst decision you could have made from a trading perspective. And interestingly enough, that's the exact same mistake traders made a year earlier, because when 2016 began, the biggest consensus trade was short gold. And gold surprised everybody by rallying substantially in the first half of last year. And that's the same thing that the dollar has done. It has surprised everybody by selling off in the first half of this year. Well, now I think we're going to have the combination of a weakening dollar and a strengthening gold market, because even as the dollar price of gold was rising earlier in the year, in terms of many foreign currencies, the price of gold was actually falling. Now I think you're going to see the price of gold firing on all cylinders, because I think we're going to see gold moving up in terms of every currency. And it's not just retailers. I mean, this is institutional money, big money that has been moving into the gold market. In fact, the retail buyer, at least in the United States, has been absent. If you look at sales at Schiff Gold, our sales have collapsed from the same point last year. There is just no interest really among the American gold buying public in buying gold. And this is not something that is unique to Schiff Gold. We have spoken with our wholesalers, and they tell us that they're observing the same thing across all of the retailers. In fact, our sales are actually down less than most of our competitors. And I think the reason for this, and I've mentioned it before, is that the typical gold buyer is a Trump voting Republican who became very enthusiastic about the prospects of Donald Trump making America great again and draining the swamp. And so while they were interested in protecting themselves from a weak U.S. economy and inflation and a falling dollar, when Barack Obama was president, they didn't feel the need to look for the same type of insurance policy with Donald Trump. Well, now I think people are going to start to figure out that nothing has changed. Instead of draining the swamp, Donald Trump is simply pouring more water into the same swamp. I mean, America may be great again, but it's not going to be because of any quick fix supplied by President Trump. In fact, the only way America is going to be great again is if we go through a protracted economic decline first, because we have to come to terms with our mistakes and allow the free market to correct the damage that years of monetary mismanagement has created. And so it's unfortunate that a lot of the retail buyers have missed out on some of the lower prices that we had earlier in the year. But you know, it's not too late. 1,310 is still a low price for gold relative to where it's going. And of course, silver is even a better buy. And you know, interestingly enough, while everybody has been missing the boat on the gold trade, a lot of people have been rushing into the U.S. stock market thinking that Trump was going to be bullish for stocks. And you know, the S&P 500 is up about 9% so far this year, but the price of gold is up about 14%. So while Americans have been infatuated with the stock market, they could have had about a 50% greater gain had they just bought gold. And I think this is going to continue. I think the value of U.S. stocks are going to continue to fall when priced in gold. And in fact, I think this trend is going to accelerate in the back half of this year. And if you remember, in the immediate aftermath of the Trump victory, we saw a big rally in the stock market and in the dollar because everybody was enthusiastic about what Donald Trump would accomplish when it came to tax cuts and regulatory reform. And gold also got caught up in that enthusiasm and went down. Well, the dollar has surrendered not only all of the Trump-related rally, but as I said, it's off to its worst start since 1985, completely reversing those gains and now real into negative territory. Gold, of course, is now reversing. This is the highest the price of gold has been since Trump was elected. So the only thing yet to give is the stock market. I think the enthusiasm is going to be lost for that trade as well as people start to realize that we're stuck with Obamacare, that we're not going to get substantive tax reform. Maybe we'll get some tax cuts that result in a bigger deficit. And of course, we're going to get some type of infrastructure spending. We're going to get some kind of disaster relief spending. All that's going to be financed by borrowed money in order to repair some of the damage that was done in Houston from the hurricane and the flooding. And of course, as more and more people begin to recognize that despite all the hope, all the hype, the U.S. economy has been weakening since Trump was elected. And that weakness, of course, is a continuation of the trend that began when Obama was still in office. So when the Fed has to finally acknowledge the underlying weakness in the economy, when they have to start talking about cutting rates instead of raising them, when they have to start talking about another round of quantitative easing instead of shrinking their balance sheet. I mean, if the dollar is this weak and gold is this strong, in the face of what everybody believes is going to be tighter monetary policy, more rate hikes and quantitative easing, can you imagine how much weaker the dollar is going to get and how much stronger gold is going to get when the markets come to terms with reality that we're going to get the opposite of what the Fed has been promising, that we're going to get more of the rate cuts, that we're going to get a bigger round of quantitative easing. So before the rest of the market, before the professional traders connect those rather obvious dots, if you've been sitting on the sidelines waiting for the bottom, I think we've already left the bottom. I think we're headed higher. This is not the time to try to look for a bargain. I think 1,310 or wherever it is when you see this video is going to be a great price relative to where we're headed. So this is the time, I think, to be buying more gold and buying more silver. Of course, if gold's going to go up, then the price of silver is going to go up even faster. And so if you already have a position, now's the time to top it up. And if you don't have a position at all, if you've been waiting for lower prices, stop waiting and start buying.